Hey, what's up, everybody? Hope you guys have had a good trading week so far. In today's video, I'll basically be going over a very popular indicator called the MACD, which is something I'm sure a lot of you guys have heard about. And I'm basically be going over how I use this indicator for both my swing trades and my day trades. And as a matter of fact, this is an indicator I actually actively use in my trading strategy and my trading system. So it's really fun for me to make this video and kind of explain to you guys how I go about using this indicator. Now, I know that the MACD is a very popular indicator, but it is important for you guys to realize that indicators are just a secondary way of interpreting market data, right? Market data in the sense of price action, moving averages, different types of closing and opening prices. The MACD is just another indicator that can kind of help you add a secondary perspective to your trading system. It's not supposed to be your only buy and sell signal for any type of trade. I don't recommend you guys do that, because if you do that over time, you're going to get very inconsistent results. And that's not what you want when you're trying to grow your account, especially a small account. So what I recommend you guys do is focus on the main price action, like the support and resistance, the different trading patterns that I talked about in the previous video, but also maybe add the MACD in as a little bit of a cherry on top of the icing, right? Make sure that the MACD helps you kind of validate your trading position and your trading thesis. It shouldn't be the primary basis for your trading thesis. As with any indicator out there, the RSI, the Bollinger Bands, any indicator out there, the price action should always be the very first thesis and the fundamentals as well for your trading system. Now, before we get into the content of this and the top 3 ways that you're supposed to use the MACD, make sure to drop a thumbs up on this video if you found this content useful. And also definitely let me know what other types of videos you guys want to see in the comment section. I'm not the most creative person out there in terms of coming up with ideas, so I'd really appreciate some sort of feedback from you guys about what kind of content you guys want to see, or what else can I work on, and how can I improve my videos in general, because that's something I'm really trying to do. And I definitely want to start pumping out more and more videos on a weekly basis. But anyways, let's get back into the content. So the top 3 ways you're supposed to use the MACD. The very first way I like to use personally the MACD is by using the simple distance between the MACD line and the signal line. Now, for those that don't know what the MACD is essentially a momentum indicator. Now, the momentum of a market is essentially kind of the strength of the market, right? So if the market is in an uptrend like this, right? So this is ticker symbol ETSI. And you can see this is a daily chart. This can be applied to any time frame, by the way. But on the daily chart, you can see that the market is in a very nice uptrend. So the market is making higher highs and higher lows, right? Which is the definition of what an uptrend is. And the MACD is essentially going to give us an idea of how strong this trend is. And that's why it's called a momentum indicator. Now, you have different kinds of indicators that you can use. You can use volatility indicators. You can even use volume indicators, but MACD is probably the best momentum indicator out there. And it's very important for you guys to have a diversity of indicators in your trading system. So you should maybe have a volatility indicator, some sort of volume indicator, if you can't read volume, right? And then also maybe some sort of momentum indicator. And the MACD for me is kind of that momentum indicator that I like to use. But in general, the best way to use a MACD and the very primary way of using the MACD is by using the crossovers on the signal and the MACD line. Now, these 2 lines at the bottom, these are essentially 2 moving averages, and the distance between these 2 moving averages is being outputted in this histogram right here. So this histogram, the green and the red bars at the bottom of the MACD, these are essentially the distances between 2 moving averages. Now, the distance between the 2 moving averages is actually very important, because if you think about it, given the way a moving average is actually calculated, the distance between the moving averages can actually tell you the strength of the current trend in the market. And it can really help you identify the entry points and the possible exit points of any swing trade or a day trade. And it's very useful for you to interpret that data in a meaningful manner. And that's exactly what the MACD can help you do. So the best way to use the MACD, or the very first way I like to use the MACD, is by using the crossovers on the signal and the MACD line. And that can be interpreted by crossovers in the histogram. So if I'm looking to enter a long trade, I'm waiting for the MACD to turn from red to green. And the same thing applies for bearish trades. I'm waiting for the MACD to turn from green to red. Now, obviously, you don't want to blindly buy when the MACD turns from red to green, right? You want to wait for a confirmation. And what is a confirmation? A confirmation is either some sort of continuation bullish pattern that I've talked about in the past. I can link to that video in the top right, or some sort of bullish candlestick formation, which is something I'm going to talk about in a later video. But essentially, you want to look for a confirmation, maybe at a support area on the chart, right, for entering using this MACD. And that's the best way that you can use this first way of using the MACD. So right here, you can see that we're in this nice uptrend, right? So the uptrend is very strong. And then you can see that the MACD flipped very mildly from green to red. So this essentially tells us that in the medium term, the trend has stagnated, or the trend is losing energy, right? And that's typically the time you want to actually enter the market. As traders, we look for good prices and we look for good entry points on the market. And the best time to enter a market is when the strength of the trend is weak, but the trend is still bullish, right? We want the trend to still be up, but we can wait for the strength of the trend to weaken so we can get a better entry price and ride the wave higher. And this is exactly what the MACD can allow us to do in this case. So we can still notice that the trend is still up, right? We're still making higher highs and higher lows, but now the price is kind of just consolidating sideways. And then the MACD is showing us that the strength of the trend is dying. So what I would wait for a support area or some sort of bullish confirmation candle. And exactly that's what happens here. So the MACD lines get closer to each other, which is represented in the histogram where the bars are essentially getting smaller and smaller, and they're nearing the zero line, which is essentially this middle line right here. And in this case, we see this bullish engulfing candle followed by the MACD crossing over, right? We're actually seeing the shortest histogram bar on the MACD, and we're seeing the lines consolidating together. They're kind of coming together and almost touching together. And that's where you want to buy, or you want to look for an entry. You want to look for an entry either at a support zone, either as a breakout, or either as a bullish continuation pattern. And that's exactly what we have here. We have a perfect flag breakout. So this is what I call a perfect MACD setup using the crossover strategy, right? We have this perfect consolidation symmetrical triangle. We have this bullish engulfing, right? And then the bullish engulfing breaks above the top trend line, which is your confirmation. And then as a secondary confirmation, the MACD lines are also crossing over each other, right? And the MACD is flipping from red to green. And you can see if you took that entry point, you could have swung this for multiple weeks and had a pretty nice gain. So that's the first way that I like to use the MACD. Now, the second way I like to use the MACD is a concept that I like to call divergence. Now, divergence is a little bit more complicated than just by looking at the MACD, right? It's a little bit more harder to comprehend, but I'll definitely make sure to kind of explain to you guys a little bit simpler in this video. So essentially what we're looking for in divergence is we're looking for the price to make some sort of gesture that is contradicting what the MACD is telling us. So the price action is what we have on a chart. So the candlesticks are the price action, but the MACD is this chart at the bottom. So whenever there is a disagreement between what the price action is doing and what the MACD is doing, that's what we call a divergence, right? And that's typically a reversal sign. So if the chart is making higher highs, right, and the MACD isn't making higher highs, that's a disagreement. And that's what we call a divergence, right? And same thing goes on the other side. If the chart is making lower lows, but the MACD isn't making a lower low at the same time frame, that's also a disagreement. And that's another example of a divergence. That one's actually called a bullish divergence. And the other one where the MACD is not making higher highs and the price action is, that's called a bearish divergence. Let me show you guys an example of that on this chart. So let's see. So right here, we can see that if we kind of zoom into this time frame right here. So we see that the MACD is making a higher high, just like the price action is right here. Same thing here, right? So right here, you have one high, price action makes one high. Right here, you have another high, right? The price action is making a higher high, and so is the MACD, right? Now, if you kind of fast forward a little bit, now we are like right here, and the price action is making a higher high, compared to this high, right? Which is a good definition of an uptrend. But now we look at the MACD. Now this might not be as clear, but the MACD is actually making a lower high compared to the price action. So compared to this high right here, which corresponds to this price on the chart, the MACD is actually making a lower high, but the price action up here is making a higher high. Now this is what we call a disagreement, and this is called a divergence, and this specifically is called a bearish divergence. And this is when we kind of want to be on the sidelines and not enter the market, right? This is telling us, or this is essentially a warning signal for us, that the trend has a high chance of either pulling back or just completely reversing on us, because the strength of the trend is not very good, right? It's essentially telling us that even though the market is going up, the momentum of the market is weakening, right? That's what the MACD is telling us. It's a momentum indicator. It's telling us that the momentum of the market is weakening, so we want to stay away from chasing this market, right? And wait for a pullback, right? And if you had followed that strategy, and guess what? The market pulled back for the next, I don't know, 3 to 4 weeks and almost a month, right? And then you could have waited for the dip and entered right here for a nice swing trade, right? The MACD is kind of giving you the warning signal to stay away from the market using this divergence. And that's exactly what happened here. Now, the third way you can use a MACD is actually much simpler, and that's using the zero line. Now, the zero line on the MACD is essentially the middle line, which is the zero line right here. So you know where the red and the green histograms meet? That's the zero line of the MACD. So the MACD zero line essentially indicates to you whether or not the MACD's trend director is telling you if it's in an uptrend or if it's in a downtrend. So if the market's in an uptrend, if the overall stock is in an uptrend, the MACD lines, the signal and the trend line right here, these blue and the yellow lines, these must be trading above the zero line if the overall trend of the market is bullish. But if the overall trend of the market is bearish, these lines must be trading below the zero line, as we can see right here, right? This chart, again, bullish chart at this kind of general price area, right? Bullish chart, and the MACD is corresponding with that, and it's trading above the zero line. But now what we have here is now we have this huge sell-off on this ticker symbol, and then the MACD simply, not only does it turn red on the histogram, but it also falls below the zero line. And that's kind of your direction or your warning sign to kind of stay away from the market and maybe wait for a pullback or maybe wait for some sort of confirmation to enter. And the best way to utilize this strategy is by waiting for the MACD line and the signal line to flip from zero to positive. So from turning from negative, so trading underneath the zero line, to start trading above the zero line. And that's one of the most bullish indicators you can actually use on the MACD. And it's a very effective strategy that if you apply correctly using some sort of confirmation strategy, then you can really make a lot of money swinging this multi-week. And this is one of the strategies that I applied for this ticker symbol right here, ticker symbol AKER. And this was a biotech, and it was a very low float stock. And this one actually proved to be a perfect swing. So this is exactly what happened here. Look, the market is in a downtrend right here. The MACD is trading below the zero line, right? Perfect definition of a downtrend. Now what we wait for is we wait for the MACD line to slowly start creeping up to the zero line, which is exactly what happened in this price area right here, right? And then when we have this crossover, it might be a little hard to see here, but once we have this crossover in the market, that's when we enter the position, right? That's when we enter either a breakout or at a support zone on the chart. And as you can see, that played out really well right here. This ticker symbol rallied from $2 to all the way to $2.7 in a matter of weeks. And this is one of those perfect swing trade examples where I did end up applying the MACD for the swing. And I alerted this in the Discord, and a lot of members banked on this. And this was a fantastic swing trade that I really enjoyed. So this is kind of the way I like to use the MACD, using the flip over strategy. All right, guys. So I hope you guys enjoyed that. That was kind of my debrief of the top 3 ways I like to use the MACD indicator. Obviously, keep in mind that, the MACD indicator, it's just an indicator at the end of the day. It's a momentum indicator, and there's multiple types of indicators you can use out there. So just make sure to kind of find your rhythm, right? Try out multiple indicators. Don't overwhelm yourself. Don't put on like 50 indicators on your chart, but just make sure you guys have enough, exposure so that you can kind of feel what you're comfortable with and play it out that way. The MACD is something I'm comfortable with, and as a result, I'm using it a lot. But definitely let me know if you found this video helpful. Drop a sub, drop a thumbs up as well if you really like this. Make sure to follow me on Twitter and also join our Discord server, Team Trading Community, down below. I'll link you guys to Discord invite down in the description below. But that's it for me today, guys. Hope you guys have a fantastic rest of the week and take care. Bye.